The market is closed today, Sunday, April 26, 2026. Ondas Holdings Inc., trading under the ticker ONDS, finished the last full trading session on Friday, April 24th, at a price of $10.55 per share. This represented a slight intraday gain of 0.09% on a volume of approximately 45.4 million shares. While a 10-cent move might look like a flat line on a daily chart, the underlying reality of Ondas is anything but quiet. Most investors looking at this company see a small-cap drone and wireless tech play that finally caught a bid. But the expectation that this is just another speculative hardware company is where the disconnect begins. The reality is that Ondas has effectively pivoted from a niche components provider into a massive multi-domain autonomy platform with a backlog that grew 180% in the final months of last year. When a company with a $5 billion market cap starts posting quarterly revenue growth of over 600% year over year, the smart friend advice is to stop looking at the drone in the air and start looking at the software and the balance sheet that keeps it there. If you are tracking Tesla stock or Nvidia stock for high beta thrills, you might be overlooking how Ondas is mimicking that same aggressive scaling pattern in the defense and critical infrastructure sectors. The expectation was that Ondas would remain a slow-burn rail communications company. The reality is that through the acquisition of entities like Roboteam and Worldview, they have built a layered defense stack that goes from the stratosphere down to ground-level robotics. On Friday, the stock hovered around that $10.55 mark, showing significant resilience even as broader tech sectors saw some cooling. This price stability suggests that institutional hands are starting to settle into positions, moving away from the pump-and-dump volatility often seen in penny stock turned mid-cap stories. If you use a Fidelity brokerage or a Robinhood app to manage your trades, you have likely noticed ONDS popping up on more trending lists lately, not just because of price action, but because the revenue targets for 2026 were recently hiked to a range of $170 million to $380 million, depending on which analyst's model you trust. The recent movement has been a tug-of-war between short-term sellers taking profits from the massive run-up and long-term bulls who are eyeing a consensus price target of over $17. Institutional activity has been particularly telling. We are seeing players like IFP Advisors and Avion Wealth doubling or even tripling their stakes. This is not the kind of behavior you see in a company that is just a cool gadget play. These firms are looking at the $65 million backlog and the massive $1.5 billion cash pile Ondas secured through its recent equity offering. That kind of capital is a war chest. It means the company is no longer surviving, it is hunting for market share. For anyone using interactive brokerage trading or an intelligent portfolio, the cash-to-debt ratio here is a breath of fresh air. They have a debt-to-equity ratio of practically 0.01, which is unheard of for a company in a high-growth, capital-intensive industry like autonomous systems. While many investors are focused on the big tech names, the real action is happening in these specialized defense and infrastructure firms. People expect a drone company to just sell drones to the military. The reality is that Ondas is building the wireless nervous system for the next generation of industrial automation. Their private wireless networks are becoming a standard for Class 1 railroads, which are essentially the backbone of the American economy. If you are doing online investing through a Sophie Active Investing account or a Fidelity Wealth Management platform, you have to ask yourself if you're buying the product or the platform. Ondas is selling the platform. They provide the software, the mission-critical connectivity, and the automated drone-in-a-box solutions that can operate without a human pilot on site. This is the bridge between expectation and reality. The market expects a hardware sale, but the reality is a recurring service and software licensing model. The volume we saw on Friday, over 45 million shares, is a sign of high liquidity and active debate. When a stock stays flat on high volume, it usually means a massive transfer of ownership is happening. The retail traders who bought in at $2 are handing their shares over to institutional desks that are happy to buy at $10 because they see $20 on the horizon. This is exactly why you see such high engagement on investing sites when this ticker is mentioned. It has become a battleground stock. Comment below how many shares of ONDS you currently hold, or if you're waiting for a dip back into the single digits before you pull the trigger. There is a lot of noise surrounding the upcoming earnings call on May 14th. The last report was a bit of a shocker. They beat revenue estimates by a healthy margin, but missed on earnings per share due to the costs of integrating their new acquisitions. The market's expectation was a cleaner bottom line, but the reality is that aggressive expansion costs a lot of upfront capital. Ondas Holdings operates through two main business units, Ondas Autonomous Systems, OAS, and Ondas Networks. Think of the network side as the specialized Wi-Fi for massive industrial players. It provides highly secure, wide-area private networks for things like the rail industry. If a train is barreling down a track at 60 miles per hour, it needs a communication link that won't fail, even in the middle of a desert. That's what Ondas provides. The OAS side is where the drones and robotics live. This includes the Optimus system, which is essentially a permanent automated drone station that can launch, land, and recharge drones for security or inspection tasks without a human ever touching it.
They also have the Iron Drone Raider, which is a counter-unmanned aerial system designed to physically intercept and disable hostile drones. With geopolitical tensions rising globally, the demand for this tech has moved from interesting to essential. Earlier reports and past performance tell a story of a company that spent years in the lab before finally found its commercial legs. In 2025, the stock was trading under $1. Now it's a $5 billion entity. That transition happened because they stopped being just a research and development shop and started closing massive contracts. Their acquisition of Roboteam brought in ground-based robotics that are already being used by special forces and security teams worldwide. Then they added Worldview, which uses high-altitude balloons for long-term surveillance. This allows them to offer a layered view of a battlefield or a border. Drones for the close-up work, balloons for the high-altitude persistent view, and ground robots for the dirty work. When you combine this with their Palantir partnership for AI data integration, you realize they are building a closed-loop ecosystem. Looking toward the future, the outlook is shaped by how quickly they can convert that $65 million backlog into recognized revenue. The catalyst to watch is the Q1 2026 earnings report in May. Analysts are looking for an EPS of around negative 0.03 cents. If they manage to narrow that loss or show a path to profitability by the end of the year, the moderate buy ratings from firms like Northland Securities and Needham could easily shift into a strong buy frenzy. The biggest risk is the high price-to-sales ratio. At 31 times forward sales, the stock is priced for perfection. Any hiccup in manufacturing or a delay in a major defense contract could send the price tumbling. However, with the current geopolitical climate, the reality of the defense budget suggests that these systems are becoming more of a priority, not less. For those using a Robinhood stock trading account or a Sophie trading platform, the volatility is the main feature. The beta of 2.59 means the stock moves 2.5 times as much as the broader market. If the S&P 500 drops 1%, ONDS could easily drop 2.5% or 3%. But the reverse is also true. This is why self-investing requires such a disciplined approach to position sizing. You don't want to be over-leveraged on a stock this fast. If you are looking for investment help, most advisors would tell you that Ondas is a high-growth satellite position, not the core of your portfolio. But as a growth play, it has the kind of fundamental tailwinds that make it hard to ignore. They have the cash to survive any short-term market downturn, and the tech to stay relevant for a decade. In summary, the central insight here is that Ondas is no longer the speculative startup it was 18 months ago. The expectation of it being a volatile, unproven hardware play is being crushed by the reality of its massive cash reserves, zero debt, and rapidly expanding backlog. The transition from a drone company to a multi-domain autonomy platform is the key driver that has led to a $5 billion valuation. While the stock has seen massive gains, the institutional buying and raised price targets suggest that many professionals believe we are still in the middle of the story, not at the end. The contrast between the high valuation and the current lack of profitability is the tension that keeps the stock interesting. If management can deliver on their $170 million plus revenue target for 2026, the current $10.55 price might eventually look like a steal. Whether you are using a Fidelity ETF strategy or looking for individual brokerage wins, Ondas represents a unique intersection of infrastructure stability and high-tech growth. Keep a close eye on that May 14th earnings date. That will be the next major moment where reality meets expectation.